Hey, get over here. Let me tell you something. That sound that you just heard, yes, of course, that's a Hellcat engine. But you also just heard an entire gallon of gas go through the motor, as in this thing is not exactly what you'd call fuel efficient. This thing is a gas guzzler. And you know what? When you take a look at the rising crazy prices on gas, everyone's asking me, Kris, you're the guy who's done $1 billion in real estate. Is the gas situation going to affect the price of real estate? It will in 3 ways. Check it out.
One shot, now the future is yours. Go! I'm turning dreams into reality. Yeah, it's one shot, now the future is yours. Go!
Yep, that vehicle guzzles gas like I can guzzle water. And that's a problem for most people. But everyone wants to know, is it really just a gas price thing? Or will that eventually affect real estate? Well, what might surprise you is that it is going to affect real estate. It affects it in 3 different ways. And today I'm going to help you understand the history of gas and real estate. And in this short video, you're going to walk away understanding what that means for you and what you should be doing right now. Gas prices, super meaningful. It impacts people all over the world. It certainly is felt here in America because, as nearly every American is aware, the price of gas has dramatically increased recently due to the Russian-Ukrainian conflict. As of Wednesday, March 9th, the average cost for a gallon of gas in the country was $4.25, and in California, drivers had to pay an average of $5.70 a gallon. I've even heard of certain locations where it's toppling at $7.
What are you, crazy? I don't have that kind of money.
And I want you to think about that for just a moment. First of all, when gas prices go up, that not only takes money out of our pocket, but a lot of people are saying, well, what about inflation that's at 7.9%? Rising gas prices will actually raise the price of food. In fact, gas pretty much touches everything in our economy. The question is, does it actually really even get to touching real estate? So let's talk about how gas could affect real estate. This is reason number 1. This comes from a study from Oregon State University. In this study, they suggested that the 2007 housing bubble was created by subprime mortgage lending, and that was triggered by rapidly rising gas prices. So it wasn't that long ago. Like, I remember in October 2008 when the bubble burst, that all of a sudden I wanted to buy a property and the bank said, just kidding, we're not closing at a 5% interest rate, and it's now 16%. I'm like, what? Well, I'm not closing on that deal. And that bank folded 2 days later. The real estate mantra is location, location, location. If you find yourself in a location that is far from your work and transportation costs rise suddenly, that location can lower the value of your real estate. That's what this study ultimately showed. So at the end of the day, people start becoming very house conscious depending on where they live. If all of a sudden gas prices start really increasing, people start thinking, well, maybe I don't want to own real estate there anymore. And when people move out of an area, guess what happens when something was once precious becomes less precious? It goes down in value. I'm not saying that will happen, but you know what? History shows that's a possibility. Have you seen the price increase on real estate year over year over year now for the last 3 years? It's wild. And especially if you've been trying to build a new home or get into new construction, it's like, wow, we got to hurry and settle on the price because 3 months later it's going to be $30,000 more. Why are we seeing this crazy increase on prices, and how is that going to be even more affected by oil? Using data from 1981 to 2008, nearly 30-year spread, federal analysts found a really strange correlation. They said that a 10% increase in gas prices leads to a 10% decrease in construction after 4 years in a location with a longer commute relative to location with a shorter commute. Or said another way, the study shows that if you live in an area where there's a really long commute and gas prices go up, you're going to see that it's going to negatively impact your real estate. It's actually going to go down. And here's the wild part. You're telling me that if gas prices go up 10%, they've gone up a lot more than that real estate can drop by 10%? That's crazy information. And you know what? It causes me to think that the war that's happening on the other side of the world, if that doesn't get resolved soon, that's going to have some lasting impact that it may eventually be felt in the prices of real estate here. So here's the crazy part. People can't let go of this whole, well, the prices of gas are going up and it's because of this issue on the other side of the world. But you know what? It's not just gas prices that are going up. It's the price of everything. And we have a different word for that. And that word is inflation. And you know what? Inflation 100% correlates to the game of real estate. How? Well, when inflation goes up, so do interest rates. In February, the 12-month inflation hit a record high of 7.9%. As gas prices grow, the price of this and other commodities will increase the rate of inflation. This could potentially prompt the Fed to increase interest rates more quickly than anticipated, making it even more expensive to buy a home. In other words, you understand that when you buy real estate and you have a higher interest rate associated with it, you're paying more for that house over time. Interest rates connect directly to inflation, and gas is so connected to inflation because gas transports everything, right?
Down here, gas is gold, Papa.
Like most things on this world move because there is a boat on the water that is powered by gas, or you've got trucks that are basically delivering goods everywhere in this whole network. So when the price of gas goes up, it means that whatever is being hauled also has to go up. So textiles and foods and everything else is now going to be affected by it. And that's why we have to use this word inflation. And so if you're like, well, Kris, I don't know, it's a little bit of a stretch, those other studies. Like, really, is the price of gas really going to affect real estate? It's like, oh, it might be a little bit of a stretch. We would have to see those problems, endure over a great period of time. But inflation? No, this is already on our doorstep. It was 7%. I remember when it was 5%. It was unacceptable. Now it's 7.9%. And I want you to think that inflation may not adjust down, but actually might keep increasing for the next few years. So what happens if it hits 9% or 11% or 12%? They consider hyperinflation when you get to 18%. But here's what I can tell you. Even at 7.9%, and if all it does is go to 10, then over a 5-year period of time, you're probably going to end up losing half of all of your lifetime assets, as long as they're sitting in a 401k, IRA, or something like that. But let me tell you that the rich get richer with inflation. Do you know what they do? They invest in hard, tangible, physical things because these things inflate. They go up in value. Meanwhile, the value of your dollar goes down in value, and they're not proportional. For a moment, I want you to think about this. I've got $100,000 here. Okay? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. There's my 100 grand. If inflation is eroding the dollar eventually at 10%, then guess what happens over 5 years? 10 grand, 10 grand, compounding, 10 grand. Year 4, 10 grand. Year 5, 10 grand. Look at that. Half the money is gone. It's been eaten away.
Yum, 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 yum. Delicioso.
Due to inflation. So what the rich do instead is they say, hey, you shouldn't keep your money liquid in an IRA or 401k or in a bank. You've got to move it into what? Well, it looks like this. Like, let's put that into a property, and better, let's put it into 2 properties instead of 1, because guess what will happen? These properties will go up 10% as inflation is devaluing the dollar at 10%. So over 5 years, you lose half your money, but if you actually shift it into real estate, what happens if it becomes 5 times more valuable with 1 to 5 leverage? It means that you double your money. So here's my question for you. Do you want to lose half of everything you got? Or in that same period of time, would you like to double it? So I'm so proud of you for watching today's video. And one of the reasons why I hope you're a subscriber is that I'm not just here to say real estate good if you do it these ways. We got to move from Neanderthal thinking to something more sophisticated. You do that by catering to a future market, and it's a new kind of mindset. You see, when investing in real estate, it's important to be aware of what the future holds. This includes staying ahead of how macro factors like gas prices, inflation, and interest rates can affect your returns, as well as micro factors in individual markets, such as income and demographics, for example, in a particular city. Did you know that I track in the United States all 324 markets? And did you know, after evaluating all of them, that the top 5 markets have an unfair advantage in all their macro and microeconomics? And if I were to go into those factors, you'd say, oh my gosh, Kris, you're saying that out of all the markets, you're going where population is increasing the most, where earnings potential is the highest, where companies are moving in, so that even before you look at a good deal on a house, you find a good deal on a market. Well, that's one of my secrets to producing twice the ROI than you can get in your backyard and have a lot more financial success. Right now, if you have even $50,000 that is sitting in a 401k, IRA, even equity in a home, be prepared. This liquid cash, it's going to lose value, and you may end up losing half of it in the next 5 years, but frankly, it could even be worse than that. Instead, I gave you an example of how you could double the value of it. But with leverage, I'm 5xing it and sometimes even 10xing it. So if you want to know how to get in on those really high ROIs, I can show you as my partner where to put 50,000, the market, the property, and I can do it turnkey. I can make it all happen for you. And you know what we get to enjoy? We get to enjoy growth when other people are just trying to figure out how to keep their head above water. It doesn't have to be that way for you, which is why I'm helping as many people as I possibly can. Click the link below and learn about partnering with me. And let me share with you how we can build a really powerful passive stream of income, build an asset base that will grow and eventually leave an incredible legacy for your family, for a foundation, or bottom line, how you want to erase your carbon footprint and leave greater good on this planet when you're done with it. Don't for one moment think that all of a sudden you should just go buy a property, right? There should be greater strategy on how to win, which is why I've created an ultimate guide for you. In fact, I shot a video giving you the ultimate guide to doing real estate the right way for this economy. Click right here and let me show you how to get it done. We keep talking about the price per gallon, right? We're talking about, ready? So here's the crazy part. Everyone's talking about the price of a gallon of oil. It's gasoline. So here's the crazy part. People are talking about the